All right, Bulls and Bears. Hey, it is Monday, November 8th, 2021. Thank you for being here. Back with another dose of economic reality. There's just so many things happening financially, economically, and it's getting harder to sort out all of the news and separating fiction from fact. For example, there's people out there that say the rising costs that we're seeing on the grocery shelves, and in the stores, department stores, etc. They're saying that that's all a result of the approximately half a million containers off of the coast of the United States. But let's rewind a little bit, going back in time, even before the glut of cargo ships and before the health crisis. There were other areas of the economy and just the cost of living that we already witnessed for many years, witnessed just going up rapidly and rapidly outpacing incomes. For example, home prices. Another example is the cost of energy. Even the cost of cars and trucks, automobiles, even before the health crisis, prices were rising very, very rapidly and drastically outpacing incomes. So what has to happen when incomes are not increasing as fast as the cost of living and goods and services? Well, people have to take on more debt. So add two and two together, and you do see that debt increases as prices increase. And basically, that's what has to happen when wages aren't increasing fast enough to keep up with the rising costs, is people have to take on more debt. Pretty simple, right? Not rocket science. So that's why I continue to say that just getting these cargo containers onto shore and onto the shelves, is not going to really solve the long-term underlying issues of what we see here in this monetary structure and this economy. I continue to believe that this country is towards a major economic crisis. It could be a slow motion one like we've been seeing with the rising cost of living. Could there be a Lehman Brothers moment, a financial crisis type of moment that brings this whole financial system crashing down? Absolutely. And on this channel, we've pointed out many different types of events or situations that could make that happen. For example, there could be some sort of glitch in the way that money gets transferred. Right? What if the banking system goes down? We've seen other types of attacks on certain systems, including the meat packing plants. What if the whole banking system, some sort of glitch or issue hits, and causes everything to freeze up? Without debt and without the money flowing into the economy, debt and borrowing, this whole system, this whole economy freezes up, and then you're going to see not a slow motion crash, but a fast motion crash or financial collapse. All right, and we pointed out several of these here, but pick what sort of black swan event, could bring this system down. But without something like that happening, we're seeing the banks continue to loan out money out of thin air. The people willing to borrow more money to pay for whatever it is, including the higher cost of automobiles and you name it, home loans. Combine that with institutions and companies coming in buying homes, you're going to see just nothing but rising prices unless something changes. Right, but let's get into the news here. We're going to talk about the supply chain disruptions, the labor shortage, and more. And we're looking at this Yahoo News article out of Business Insider. 3 employers who hiked worker pay say they're not suffering from staff shortages. One said she was actually a little bit overstaffed after boosting starting wages to $14 an hour. Okay, $14 an hour, I don't know about you, but where I live at, $14 an hour is, I was going to say barely scraping by, not even scraping by here in San Diego. So I guess if you're in Mayberry somewhere, or some rural area where you can get an apartment maybe for $450 a month, then maybe $14 an hour will get you by. And it's interesting, they said 3 employers. I wonder how many employers they had to survey or look at before they found 3 employers that said they're not seeing any shortage of staffing. Well, when we go down into the article, we do see a little bit more of the real situation. A restaurant owner in Manhattan, very expensive, said she raised her starting wage to $25 an hour and is fully staff. So yes, $14 an hour is not going to get you by in Manhattan or most other major cities. I would dare to say that. Also from this article, a Michigan bar owner says she pays $15 an hour to her staff, not seeing any shortages. But again, doesn't really go on to tell us how many restaurants they had to look at before finding the 3 restaurants that said they're not seeing any staffing shortage. And there are people out there that say the solution to all this rising cost of living is just to tell companies to pay more, tell employers to pay more. Well, until you look at the small business statistics, which reveals that 8 out of 10, approximate 8 out of 10 small businesses fail within the first 10 years. So when you see that, then you know that it's not as simple as raising wages. There are businesses out there that really can't afford to pay much higher wages. The Walmarts, the Targets, the Home Depots, I would say yes, they can afford to pay higher wages. All right, when you look at the profit levels and the CEO pay, of these big mega companies. All right, so please let me know what you think about that. 3 employers saying no staffing shortage, $14 an hour. Is that good? Next article here, changing topics a little bit. Forgiving millions in excess unemployment benefits is no easy task in Connecticut. So a lot of people in Connecticut found out that they were overpaid in unemployment benefits, and now they're being asked to pay the money back. Well, that's the problem with relying on some sort of payout. If you find that there was some sort of mistake, most of these people are saying the money has already been spent. What if a lot of people spent the money on their rent and they didn't have enough money to pay the rent to begin with? They got the unemployment benefits. Now they have to give some of it back. What if they don't have it? What are they going to do? All right, so as you can see, these things can evolve into a big mess. When you rely on ever increasing payouts to help people keep up with the rising cost of living, there's always going to be situations like this, people that fall through the cracks, people that don't fit in with the guidelines. And while it may help some people for a certain period of time, you have those people that fall through the cracks, and payouts are not a long-term solution. Wage increases are not a long-term solution, right? Keeping the cost of living in check, doing our own manufacturing here in the United States, those are a couple things that you could begin with as far as fixing the long-term problem. But really, no one's talking about that. No one's looking at real solutions. There's people out there blaming the current regime, the current administration. These problems started long before the current administration. And no, the problems were not fixed from 2016 to 2020. We saw rising costs then. We saw massive spending then. There are some things that are different, but there's also a lot of things that are exactly the same. All right, next, ABC7news.com. New study finds millions of California workers are functionally unemployed. What does that mean? They're not making enough. Even the employed people that you see, and they're touting how great the job numbers are, everything's great, look at the job numbers. But in reality, from this article, officially California has 1.4 million unemployed residents, but a new study takes into account people that can't find jobs that pay above poverty level. We were just talking about that. $14 an hour, basically you're in poverty if you're in California, in most cities here in California, or Manhattan or places like that. The number of functionally unemployed people is 3 times higher at 4.8 million. I would guess it's even higher than that, but at least they're getting into some realness as far as the cost of living. All right, more from this article. 25.7% of California workers are functionally unemployed, meaning that they're seeking but unable to find full-time employment paying above poverty level. So all those great unemployment numbers that are out there, I wonder how many of those people are actually making poverty level wages. Oh, and by the way, California has some of the highest unemployment if you believe the official unemployment number, which I don't, it's closer to 25%. But the official number that they put out there is 7.5% in California, one of the highest in the country. All right, interview that I heard recently, it's out there on YouTube. Bank of Canada governor says inflation transitory, but not short-lived, right? So here we go with these word games again. Remember over a year ago now, I think it was, the Fed said inflation's transitory. Here we are a year later, we're saying, okay, they were wrong. Inflation has continued to increase. And you see these word games. The word transitory doesn't give you any type of timeline. It just means not forever. or not permanent. It doesn't mean a year. It doesn't mean 2 years. So that's why they use these words. Can you see the types of words that they're using? So inflation is transitory, according to this governor out of Canada, but not short-lived. So how short is short-lived? And how long is short-lived? Well, there's no answer. That's why they use words like this. Transitory just means not forever. Maybe inflation will be here for the next 100 years. And that's the thing. These people don't even know. So they have to use these word games and these opinionated words to try to act like they know what they're talking about. What's going up or what's up, as some people would ask? Well, gas prices up again. The average price of U.S. gas jumps by another 5 cents over the past 2 weeks. Just like we warned you about here, it's going to continue to go higher and higher. I wouldn't be surprised to see the national average at $3-4 a gallon, maybe even higher. Who knows? Nobody knows. There's nothing being done to fix the problems. So please let me know down in a comment what you think about this. How high will the national average go? Right now it's about 450 to 470 here in California. You're lucky to find it at 450 actually. Jim Rogers out there saying inflation is going to continue to get worse. Legendary investor Jim Rogers. Interview over on YouTube. You can find that. Everybody agrees. The writing's on the wall. Nothing's being done to fix the problems. Prices continue to rise. How long is the average U.S. household able to keep their heads above water? Please let me know down below. You can take on more debt. You can borrow against the equity in your home. You can ask for a wage increase, a pay raise, and that might get you by for a while. But when the cost of living continues to outpace wages, there has to be a breaking point somewhere. Mega bankruptcies on the horizon. If and when, I mean, please let me know down below. But we're going to continue to keep an eye on things. Thanks everybody for watching this report. Keep stacking, stay well, stay prepared, stay positive. Bye for now. Bye for now. Peace.